Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Hump Day Wednesday. Our toll-free number, 800-951-0592. The website at allamericangold.com. And we're waiting. Tomorrow we get inflation numbers. Tonight, that big old Hurricane Milton coming ashore. Unfortunately, the updates keep getting worse. So it's back to a Cat 5. It's going to now, they're saying, make landfall as a Category 4 storm. And then they did this graphic, where it's hitting, not a great spot, right? So somewhere between, Tampa and maybe right south of Tampa, very low line, the Sarasota region. But they did this thing. I don't know if you saw it. So they wanted to give people an idea of how big the storm surge is going to be. And it looks like it's going to be a record, but it was crazy. So they have like this reporter. They got, kind of like, okay, here I am. I'm just standing on a street. Okay, and there's some homes in the background. And they do a 3-foot storm surge. Right? And you're like, oh, that's not that bad. Okay, I mean, it sucks. That's not that bad. Then all of a sudden it went up to 6 feet. So it's taller than the gale that, the person doing the reporting on this. Then it went to 9 feet. And holy crap. You can just see like the neighborhood, the mock neighborhood behind her. You're talking about the water, right, is coming up to the second level of two-story homes, single-story homes. Like they're literally, you can barely see the roofs. But then they said, hey, it can be 12 feet. And then Jason, it looked really, really ugly. And I wonder, is this, obviously it's going to cost more money, right? It's going to add to the debt, right? We know FEMA needs money and the disaster relief fund's empty, blah, 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 blah. Who knows about the insurance type losses? I think this is probably it for homeowners insurance coverage in a lot of places now where, hey, you can get homeowners insurance, but we're not covering anything hurricane related at all. It doesn't matter what it is, right? We don't care if it's wind, right? Because you got to remember, the wind is going to be blowing like 140 miles an hour, right? On top of all this water. But do you think this could be the start of, I don't know, a housing reset here? Already, by the way, contracts, mortgages, applications for mortgages to buy a home, not going anywhere. Of course, the 10-year note, by the way, spiking back up again. I thought when you lowered rates, interest rates are supposed to go down. Yeah, no, they're not. We warned you about that. But I'm just curious. Because already Florida was like, okay, we got problems here, all the condo towers and all that stuff. Hey, we got to spend a ton of money. We're going to hit you with, hey, you got to pay an extra 20, 30. Some places were charging their owners in these condos $100,000. And they're like, screw it, I'm going to try to sell. I hear that even the institutional buyers, which, that's a lot, are trying to unload these homes in Florida. I just wonder, is it possible that that this starts this wave where we've got a housing problem? Because anywhere where, hey, we get any kind of weather now, insurance is going to be a problem. And I think, Jason, just that alone could just be like, okay, nobody wants to buy them.
I think that's very likely. We don't get too conspiratorial on the show, but the more conspiratorial you get when it comes to the weather, you could see a lot of small fish being eaten up by bigger fish. I know that you're saying that some of the bigger institutional investors are trying to offload this stuff, but someone's going to end up owning it, right, Joe? Someone's going to end up owning it. I know that there's a couple of insurance companies in Florida that were looking like they were going to fail before Helena. This is going to take a couple of them out.
Yeah.
And as far as repositioning property, I think there was a lot of distress in the insurance. I think, are we looking at commercial loans going to trigger it? Well, is it going to be the insurance companies? There's just a lot of weakness all around. There's going to be a reset. There's going to be a financial reset. I think we're in the middle of it. I think 10 years from now, we're going to talk about how 2020 was the beginning of the whatever phase that we're in. And they'll blame COVID, and they'll blame war, and they'll blame weather, and they'll blame insurance companies, but they will blame everybody but the money creators. It's the Fed. It's the central banks, and they're going to win in this thing. They always win, Joe.
Yeah, now they're it just got upgraded here again. Now they're saying a 15-foot storm surge. That's all-time record high type surge. And apparently, unfortunately, some bad news. Yesterday they were saying, hey, maybe this thing will go a little south. They're now saying it moved slightly north. The eye of the hurricane is now back to the southern end of Tampa Bay. So I don't know, man. That's just brutally bad. We'll see how it plays out. I guess, this time tomorrow, this thing will have gone through. We'll see how bad it ends up being. Let's hope for the best and everybody get out. Problem is, gas stations got no gas. We'll be back after the break. 800-951-0592. Quick look here at the markets. The Dow's up 200 points. News breaking that China may unleash another huge stimulus package. They have I don't know if it's an emergency meeting, but the meeting is going to be Saturday. So kind of an impromptu here. People anticipating a bazooka. That's what I'm anticipating, because if it wasn't going to be something massive, why not just announce it today or tomorrow, right? But something coming now Saturday. And, of course, why do I get the feeling any generator stock, any lumber stock, right? All the rebuilding stocks are probably flying right now as this thing looks to be extremely deadly. The S&P, the NASDAQ are higher. The 10-year note, 405, continuing to click higher. Listen, when you've got to sell all this debt, that's what happens. Oil's down $1. We'll see how this plays out. Now we're getting reports that Israel is talking with the United States about exactly what they're going to hit in Iran. That call, I believe, is going on right now. We'll watch and see how this plays out. Depending on where you look with gold, gold's flat or down $5. But either way, gold right now, 26.17. 26.17. That's higher than where we were yesterday. Silver, I keep telling you. Silver right now, 30.60. So where were we yesterday? Like 30.25, right? So remember, all out buy on silver right now. By the way, I just don't know how this is going to end. I just don't see how this ends well. Especially when you look, we got the election coming, right? Both are going to spend money. They go, Trump's going to increase the budget by $7 trillion, and Kamala's going to increase it by $3.7 trillion. Yep. That's if they get everything they want passed. They won't. But either way, think about this. That's $2 trillion plus $1 trillion, $2 trillion plus $2 trillion, right? I mean, either way, huge increase in the debt coming in 2025. You got to remember, Wall Street had a huge year this year. It really did. Had a great year. Do you know that tax receipts were up almost almost $500 million from last year. All of it because the big guys are all selling, right? We keep telling you, they just keep selling and selling and selling and selling, paying their capital gains tax. That's not going to continue. And my fear is we're going to go back down that $500 billion. Probably increase spending by another $300 or $400 billion. All of a sudden, you're at $3 trillion. I'm just telling you, this is what's coming. Get more diversified. Believe me when I tell you. And I know you're being, I want to see. I want to wait. See who wins. Is it going to be Kamala? Is it going to be Trump? Who's it going to be? Don't wait. Don't wait. Call our friends over at Y-Refi, up to 10.25% fixed rates of return. I mean, think about this. If you went with Y-Refi for 5 years, you're going to get 10.25% a year. That's 50% in 5 years. Yeah, over. Right? 51 and a quarter. And guess what? It's not correlated to Wall Street. It's not correlated to the Fed. Right? Isn't it nice to have a little safety net, something that, hey, this I know. This is what's going to happen here. I'm going to be good here. I can use it as income. You can turn it on. You can turn it off. You can compound it. They don't play any games. They don't charge any fees. You got to have a minimum of $50,000, but check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-Y-REFI-24. 888-973-3924. And news breaking that Biden and Netanyahu are having a crucial phone call today. This is the first call since Iran's attack. Kind of interesting. Boy, you'd think that they would have had more than these, but again, who knows? Maybe Biden, somebody woke him up. It was the call it's either just ending, because it was supposed to start like 50 minutes ago. So, depending on, I don't know, maybe, Biden was probably still eating his Jell-O or something like that. I don't know. And by the way, Kamala's going to be on the call, so that should make it better. Two great minds, right? Boy, I would love to hear what that is going to be. Well, so I would say, right? I would say this, Jason. I expect that maybe by this weekend, are we gonna see if they're going to hit the nuclear and oil facilities in Iran?
Just the way that you presented the story, that there's going to be what really sounds like a business meeting about what Israel's going to do. It shows you how interconnected the two countries are, that they won't make a move without each other. It's almost like it's just definitely one fist. It's not two different hands. But yeah, Joe, doesn't this sound like a business deal? Hey, if we hit certain targets, that's going to affect certain industries from our other. Israel has economic interests. America has economic interests. It sounds like they really need to know exactly what they're going to bomb before they bomb it, because of all of their financial interested conglomerates and banks that are interested in, of course, Iranian assets. So to me, Joe, what you're looking at is it's a business negotiation. That's what they're doing.
Well, it's funny.
What happened to the days where you just blow something up? What happened to the days where you just go blow something up? No. Everybody has financial interests, even in Iran, Joe.
It's funny because that's kind of what they're saying. That the reason why Netanyahu hadn't talked to Biden is apparently he has now made his decision, and he's just going to inform Biden what it is that Israel's going to hit. That's what this is trying. I don't know if that's true or not. By the way, the Israeli defense minister was supposed to fly to Washington, D.C. today. Apparently Netanyahu said, nah, you're not going. Stay here. I'm going to make the phone call. So apparently, I guess if I'm reading this through the tea leaves here, who knows? It sounds like the strike is on. We just don't know what it is. But allegedly, he is informing the United States exactly what Israel's going to hit. My guess is, and also when they're going to do it.
Posturing.
Yes, yes.
This is in war. You don't tell people what you're doing. You lose the element of surprise. I mean, how fake are our wars now? Yeah, people are dying. There's things getting blown up, but it is so fake. It is so contrived. This is why I keep saying that all this stuff is interconnected. All these banks and all these big corporations are all married together. The big club, George Carlin, the big club, right? The big club has to have a meeting to decide what kind of warfare and what will actually get blown up. And a country like Iran, they have to be careful of because Iran's not fully in this club. So they know that Iran can be unpredictable and what they might do in retaliation. So it is. It's like a business. It's a business deal. And if Iran joins the BRICS and then Russia and China gets Iran all happy, indebted to them, then Iran will be maybe will peacefully be brought into this world system, and that'll be the end of it, right, Joe? I mean, because if you get Russia and China actually backing you up, Israel doesn't attack nothing, do they?
No, and again, I think this is something that. Remember like when Iran, right? They were going to do a strike. Kind of the same thing. Everybody had to have a big meeting, right? And decide. Okay, here's what you're going to be allowed to do. Here's what you're not going to be allowed to do. And of course, the only people that suffer are the citizens, right? The people suffer, right? I mean,
Iran should be attacking. Iran should be angry. Iran should be going all out, right? And they're not. Well, they got these brand new allies that are guaranteeing them, nice shiny new things, right? And so now you got Russia and China. Maybe this whole thing is about saying, hey, is Iran controllable now? Do our bankers over there in China and Russia, do they got a good foothold on this country? Are they joining us? Because if Iran has a controlled response, then the world's going to be a happier place because now they've brought another rebel into the mix, Joe. And this time they didn't have to kill Saddam Hussein or the over there in Libya, they didn't have to
Muammar Gaddafi.
Yeah, he didn't have to kill him this time.
We'll see. Once again, this has been a year. There's no lack of things to talk about. But why are Treasury yields continuing to go higher? Why? Well, we keep having trouble at these auctions. Are you guys not paying attention? Yesterday, $58 billion in 3-year notes. Okay, 3-year notes isn't that long. When you're like countries and things of that nature, that's a shorter dated treasury. Yeah, okay, it's not super short. It's not 2 years or less, but these are normally easy sells. Easy. But $58 billion, by the way, that is the all-time high for this note. $58 billion, a new record high of issuance on 3-year notes, was incredibly ugly yesterday. A big tail, almost a whole point of tail. That's just off the charts big. And you don't normally get these tails on the shorter auctions. You're supposed to get the tails. I can get you like the 10-year note, the 20-year, the 30-year. Okay, that's, maybe a little harder. By the way, the bid to cover. This is a note that, like I said, pretty easy sell. Bid to covers used to be close to 3. They've been around the high 2.6s. This came in at 2.4. Not good. Way below the average for the last 6 auctions. So think about the last 6 months, way below that. The internals were really bad. Indirects, just 56.9% of the auction. That is the lowest this year. By the way, who's the indirects? That's the foreigners. Remember what we talked about yesterday. They're not coming. We're issuing more debt than ever, right? Here's a great example. $58 billion, all-time record for this 3-year note. And guess who didn't come? The foreigners didn't show up. By the way, you know what the record is? 78%. So think about this. The record's like, okay, the foreigners bought 80%. They normally buy, somewhere in the low 70s. They just bought 56. We're getting ready to go below half. Direct bidders had to take down 24%, the highest in a decade. And then, of course, the dealers were left with 20% of this. And, Jason, this is the exact thing we keep talking about. Right now, the United States is being forced to consume, in this case, almost half of the auction had to be consumed right here. And that is not a sustainable path at all. And this is why these yields are rising.
Yeah, just because the Fed sets the rates doesn't mean it has to be exactly what they say, right, Joe? They can lose control. It's hard to believe that, but we'll keep watching it. They're going to lower the rates.
I'm just shocked. Right? I mean, think about this, right? We have some kind of expansion here of war with what's going on in Israel. Obviously, what's going on in Ukraine. We have another major hurricane that's going to do all kinds of damage. There's so many things to have countries like, hey, let's just go to safety. And they're looking at the U.S. bond market and saying, nah, that's not that safe. 800-951-0592, Patriot Radio News Hour, Joe and Jason on this Wednesday. By the way, Boeing talks have now completely broken down again. S&P saying that they have put Boeing on credit watch negative. So remember, we talked about this as well. Boeing is just one grade above junk. Now S&P saying, hey, this strike doesn't look anywhere close to resolving. It's just a matter of time. I think the junk rating is going to come here. Bloomberg reporting that the negotiations ended and in complete collapse. Boeing and the machinist failed to reach a deal. The strike on now its 27th day. By the way, this costs Boeing $1 billion every month. So they're down $1 billion. They're just burning through cash. Boeing says it withdrew its offer. They were giving them a 30% raise over 4 years. See, here's the problem. The longshoremen, they haven't even agreed. They're back at work until January with a 62% raise. According to the CEO of Boeing, the union is making what he called a non-negotiable demand that exceeds what can be accepted if we are going to remain a competitive business. So the CEO of Boeing said, Jason, we can't be competitive if we pay the machinist what they're asking for, and now we're pulling the offer. I don't know how this ends, but this is the problem. This is what happens. Right, when you're sitting here watching these companies and these union workers, they're seeing these huge wage increases others are getting. Jason, they're like, hey, we're going to get ours. And if you don't want to pay us ours, we'll put you out of business. I mean, this is something, I don't know how much longer this can go on. Boeing's talking about trying to raise $10 billion by issuing more stock. But if they get put into junk, all of a sudden now, two things happen. Number one, it's going to cost them a lot more. Number two, there's a lot of these investment houses you can't even buy. You're not even allowed to buy bonds or stock in a company that has a junk rating. This is a big problem.
Well, when the economy gets a little shaky under whatever rules they're ruled under, Joe, if it gets bad enough, the people that actually produce things start to become very powerful, right, Joe? You could be a big shot billionaire Elon Musk, but if everybody that's working for your companies that actually makes everything turn and work, if they suddenly are like, you know what, we just can't make this isn't going to work. You're not paying enough. We can go work at McDonald's, and even though it's a huge pay cut, it makes more sense than what you're paying for what we're doing. And the people that actually do the producing, eventually it'll come your way. Now, if you're in a profession like working at McDonald's, you don't have any power. Most anybody can walk into McDonald's and do that. But I mean, I don't know what it takes to be a dock worker. I don't know what it takes to be a Boeing employee. I'm sure it takes a little
right?
more. Yeah, it takes a little more effort.
You're not going to find these machinists on the street, right? I mean, that's like, hey, we're going to have a job fair, right? And hire 1,000 machinists. There's 33,000 of these guys, and really, what do these guys do? These are the guys that fix and build all the machines that build these airplanes. And these are not, like I said, it's not like you can buy these machines at Home Depot. They don't exist. Right? They don't exist. Something breaks on one of these machines. Well, guess what? Hey, get one of the mechanics, get one of the machinists down here, because we need them to go make this part, because there's no replacement part. Right? You can't go to Harbor Freight. Get Harbor Freight on the phone, right? That's not going to work. Yeah, Jason. And here's the other part. By the way, Boeing has $4 billion in debt that matures. It is due April of 2025. And S&P is now saying, listen, they need to raise $10 billion now. They got to pay another $4 billion in 2025. It's just a matter of time. The cash is starting to run out. Now, am I saying, hey, Boeing's going out of business? No. That's not what I'm saying. It's not what I'm saying. But what I am saying is, once again, a big part of, like these planes that they build, they're $1 billion a piece or more. This is huge, and ultimately, at the end of the day, Jason, this is what inflation does. This is what happens, right? Most of us are sitting there going, God, this is outrageous. They offered you 30%. That's a lot, right? That's a lot, right? And they're like, no. Sticking the middle finger out, right? These dock workers, I couldn't believe it. I thought the dock workers trying to keep up. I'm like, there's no way they're going to give these guys 60 or 70%. They gave them 62%.
And what does that say about what's coming? I mean, and we talked about these workers knowing their value, Joe. When economies get shaky and things start to look wrong, you get inflative periods like this, value sticks out like a sore thumb. This is why we sell gold and silver. This is why gold is just run all year. It's usually a leading indicator, not a lagging indicator, although it can respond both sides of inflation. These workers are like gold. There is a value into what they do, and yeah, they can be underpaid just for so long until what they're doing doesn't make sense. It's the same thing with the gold and silver price, right, Joe? The silver price doesn't make any sense up until the point where, okay, pretty soon, it doesn't matter if America is friends with China the way I think it is. The banks they're working together. At some point, China needs a certain amount of silver, and a certain amount of silver needs to be in America, and eventually there's just not going to be enough because it is an industrial metal as well as a financial metal, and then the price is just going to shoot up like a rocket ship. Gold is a monetary metal. Everyone needs money when things are monetarily not making sense. So yeah, Joe, it's always good to bring up something like this when it comes to these strikes have been going on for 2 years. People don't realize a lot of the strikes were happening in 2022. A bunch of them happened last year and then this year. And I think whatever was agreed to in 2022, some of those strikes, I don't think that lasts very long, Joe, does it? I mean, that's one of the reasons they strike is we need to renegotiate, right? It's all these labor unions that want to break the contract and renegotiate because it doesn't make sense, right? You hardly ever have the agreement in place, and then those that are paying it out want to break it. These big companies, they have an agreement. They want to hold on to that to the very last moment, right, Joe? Because they know it's going to be after the next contract means more. That's how inflation works, right, Joe? We're seeing it. We're seeing it in full force.
Everybody hang on to your hat. This is the year of chaos. Holy cow. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here. Listen, it's an all-out buy on silver. I can't stress it enough. If you're looking to get some big gains here in the future, the great part is premiums are really good here. My gut hunch is after this election, you're going to see premiums go back up. If it's Kamala, if she wins, I think we're going to see the big premiums come back. Be safe here. Buy now. That way you don't have to worry about it. There's no doubt in my mind, I think after the election, you're going to see the premiums go back to somewhat normal. But if it's Harris, I think you're going to see these big premiums come back. Remember the COVID premiums? Silver was $18. Silver Eagles were $36. Right? And that was, again, we were the cheapest around. Today, I did it yesterday. I'm going to hold this price for one more day. Rolls of Silver Eagles, $750. It's cheapest anywhere. You can't buy Rolls Silver Eagles somewhere for that. Can't. Rolls of dimes at 120. That's 50 silver dimes at 120. Rolls of silver quarters at 240. Rolls of silver half dollars at 250. And again, silver was already in deficit. It's been in deficit. This is year 3 of the silver supply deficit. And it's taken, there's no more surplus. The surplus is gone. On top of this, we have huge production problems coming out of Mexico. And it's a big problem because Mexico provides more silver and it's not even close. The problem is the number 2 market, China, they got the same problem. And there's no more, add more shifts, get more dirt out of the ground. They're doing it. Believe me. And it's not enough. And now Russia's big announcement the other day, they're going to start adding silver into their gold holdings. And Jason, I know it's hard to look at it, but $50, $60 silver, don't be surprised in 2026 that's what we're looking at, and if not more. Because as we know, listen, silver's needed for all of this, green energy, electric data warehousing on top of electric cars and solar and, right, all the wind, hurricanes. Got to seed the hurricanes. Right? You got to seed them. Get in it and get in it big. By the way, $20 gold pieces, $27.50, 10 or more, 27 and a quarter. And if we're right here and the Israeli attack is coming and we're expecting a big bazooka coming out of China this weekend, I think we're going to see this. We've had a nice correction here and go take advantage of it. It held support. 2,600 now is kind of the new big support number here. They've tried to get there a few times. Close enough for government work, right? Take advantage of it. Take advantage of the premium. Just to give you an idea, a regular premium, what would the $20 gold piece today? So let's just say there was no election right now. Because this has happened. I've been here. This is my 20th year. I've seen plenty of elections. It always has, always get the low premium right as we get to these elections. Just to give you an idea. It would be $2,875. That would be a normal premium with gold at $2,615. Think about gold at $2,700. normal premium, you're probably looking at close to $3,000. Then you throw in, what if Harris wins? I mean, it's going to be close. We know that. This thing's going to come down to a handful of states. Right? It may come down, I don't know. Is it going to come down to Michigan? Is it going to come down to Pennsylvania, Ohio? I don't know. Right now, they're giving Arizona to Trump. Right? And I'm like, I thought Trump was going to kill Biden the last time in a landslide, and somehow they said he lost. If Arizona goes Harris, she's going to win. Yeah. Then what? Did you see premiums? All of a sudden, you're paying $400, $500, $600 over on a 20? Absolutely. Could you see where premiums on Silver Eagles, as an example? $10 over spot, my cost. Imagine, silver, say, let's just say silver's at $32. And now they want $42 for me to buy Silver Eagles. Well, you know what? I got to make some money, right? You're going to be paying $46, $47. Other places be charging you $50. Buy it now and avoid it all. U.S. Silver Eagles, $750. Rolls of half dollars, $250. Rolls of silver quarters, $240. Rolls of silver dimes, $110. $20 gold pieces, $2,750. 10 or more, 27 and a quarter. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up a Wednesday. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Wednesday. Boy, tomorrow's going to be a big day. Not only are we going to see what happened with the hurricane, we're also going to get that CPI number. We'll see how that number looks, right? The lower, I guess, the better. I don't know that it's going to be lower. I really don't, but we'll see. And then are we also going to be talking about an Israeli attack? I don't know. I'll say this. If they decide to hit Iran's nuclear facilities or the oil facilities, it's going to be a wild market come tomorrow. So buy during the calm, right? $20 gold pieces, $2,750, well below normal premiums. And like I said, I think a Harris win, forget it. I think premiums go through the roof again. Silver, just an all-out screaming buy here. Rolls of Silver Eagles, $750 a roll. The rolls of silver quarters at $250. Rolls of silver $50 at $250. Silver quarters at $240. Silver dimes at $120. At 800-951-0592. And PIMCO, by the way, PIMCO, $1.9 trillion bond fund. They are massive, heavily involved in U.S. Treasuries, saying that wider budget deficits and inflationary trade policies will weigh on U.S. government bonds despite the advantages of central bank being in easing mode. That's kind of what we've been talking about. The Fed's lowering rates. The bond market's not cooperating. Remember, the yield curve uninverted like 3 weeks ago. We're on the clock. Right? You got 90 to 180 days usually when this happens before the bad stuff comes. High government yields or high government deficits are simply going to push rates higher over time, and there's really no alternative. They say U.S. deficits will be higher and will be the biggest loser, no matter which party wins. Are you listening? Doesn't matter who wins when it comes to this. Now, it matters for other things, but not for this. The debt will continue to steepen the yield curve. Oh, boy. We haven't seen really steep yield curves. Really going back, what, almost 50 years? We've been in this 40-year bond super cycle. Think about it. Right? Remember, we got rates, near 20% at the end of the 70s. And we've had interest rates go down, all the way to zero. And now PIMCO is saying, hey, guys, I don't care what the Fed does. They're going to lower rates all they want. The yield curve is going to steepen, and they put it pretty nicely. The potential for global disruptive trade policies appears greater, and it's going to complicate efforts to get inflation back to 2%. Yeah, in other words, it ain't never coming. 800-951-0592. Jason and I, we're going to be right back.